and welcome to the Financial Room. I'm your host, Natasha Bridgmohan, mortgage broker with Mortgage Intelligence and President and CEO of the Bridge Group of Companies. Today we're going to be talking about a very important topic, which is saving for your child's education. Now, education in this country has become a priority for Canadians. This is a generation known traditionally as a millennial generation or the XY generation. Now, it's very, very important for parents to understand that not only is cost of living going up in terms of household expenses, but one of the biggest expenses that's continuing to rise in this country is education expenses, especially post-secondary education and specialty schools such as med school, law schools, teacher college, and etc. Now, today's topic, we're going to cover 3 sections and talking about how to help you better prepare yourself and your child for stress-free enrollment where financial burden is not priority. How are we going to do that? Well, we're going to identify and show you resources or strategies of where you can gather money to help put aside for your child's education or your children's education for that matter. And once we've identified some of those sources of income where you can put money aside, we're also going to talk about amazing places or products where you can actually park your children's money and get an amazing return or an ROI, like investors like to call it, in terms of having that portfolio grow for your child and ensure that not only it's enough for them to cover their tuition costs, but also for their books and possibly housing expenses too. Especially if your child is a very ambitious one who has high goals and ambitions in life in terms of acquiring not only a degree, but a specialty degree or mastering or having a PhD or so forth, or becoming a tradesperson that can be very expensive sometimes depending where and how they're going to be valuing their education. It can get very, very, very pricey. So let's talk about something that you're probably wondering, oh, wow, my child is brilliant. They definitely have big dreams. How do I as a parent fulfill that dream and ensure that, again, financial hurdle is not at the realm of their time of enrollment? And that's very, very important because financial stress impeding on a young person's life can also cause them a little bit of stress in terms of allowing them not to move forward and having that successful experience in post-secondary environment. So income. As a parent, and I'm also a parent, I know how difficult it may be in terms of finding that extra cash flow every month to put away for your children's education, especially if you have more than one child. So how are we going to do it? Very, very simple, my audience. You're going to start by doing a monthly budget. How are we going to identify areas where you can put money aside for your child's education? Well, first of all, if your child is under the age of 18, they may be qualified for their universal child care benefit, or they may be qualified for the child tax benefit or any other tax credit that the government is giving you. Instead of parking that money into a general account that you and your husband share for household expenses, create a separate account for your children and transfer that money or have direct deposit of those funds go into their account and call it their own, as it should be. It is for your children's education or for extracurricular activities that you may value as something good for them. So again, tax credit from any type of resources from the government could be used as a saving mechanism for your child's post-secondary education. Aside from that too as well, if your children are working and they are working part-time or even full-time during the summer, the government has a tax credit where they can actually work up to X amount tax-free. So for example, if your child is working at McDonald's or Tim Hortons part-time and they're paying taxes from their check, which is typically known as source deductions, which is CPP, unemployment, and federal tax, your child can be entitled for a hefty refund if they work under the tax exempt rule. Now that refund every month can also have your child be able to put that aside in their savings account. So that's very, very important too as well. Cash flow, if you and your spouse or yourself, if you're a single parent, have cash flow that's available, put that cash flow aside not only for a portion for your retirement, but also for your children's future. So there's different ways where you can ensure that those taxes and those savings are put away. You can also then put that money into an aggressive RESP investment account, into GICs. You can also put it into any mortgage investment products. I encourage you to contact us at the Bridge Group of Companies at www.thebridgegroup.ca or toll free at 1-866-553-7467 for further information, or talk to your financial expert. Once again, please don't hesitate to visit us on YouTube to view any of the other episodes that you've missed, and hope you've enjoyed today's episode.